Hi, Simon Murphy here, founder at myequityreleaseplan.co.uk, and I'm here to guide you on equity release plans so that you can make an informed choice if it's the right fit for you. In this particular episode, we're going to consider equity release, the pros and the cons. So we'll see you in a couple of moments where we'll discuss that. So thanks for joining me at myequityreleaseplan.co.uk. We're going to discuss that question, equity release. What are the pros and cons of these types of plans? Well, why don't we look firstly at the disadvantages? Because it's important to go into these plans with full knowledge of the negative aspects of these plans as well. So there are a couple of things to consider. For example, an equity release plan is a loan, it is a mortgage, often called a lifetime mortgage, and it is placed as a debt on your property. Now, in most equity release plans, there is no requirement to make a monthly repayment of the loan that's secured. So what actually happens? Well, the interest that's charged compounds on top of the debt. And so over time, the debt is increasing. Now, with compound interest, in latter years of the plan, this can accelerate a little bit. So it is worth noting that the equity is eroding. What's also good to remember, though, that your house price might also be increasing in value, so that might mitigate that particular disadvantage. Also, clearly, if you're taking an equity release plan, then of course, when it comes to inheritance, the amount that someone may inherit would be reduced after the property is sold and the debt is paid off. Another disadvantage that may affect you is your state benefits may be affected. It's important to get specific advice on this because not all benefits are affected. And an equity release plan advisor would be able to give you very specific, personalized advice to make sure that with this particular possible disadvantage that you're not negatively or adversely affected. Another disadvantage to consider is if you take an equity release plan and you want to redeem it very soon after, there can be quite high penalties in order to do that. So the idea really of an equity release plan is that it is a longer term commitment, also called a lifetime mortgage because it's designed to facilitate you for the rest of your life. So those are some of the disadvantages. But what are some of the advantages of taking an equity release plan? Well, there are a number of advantages. What most people value is the ability to either take a lump sum or to agree to take even a yearly allowance to supplement their income. This can ease the squeeze on incomes if you're on a particularly low income or you have a small amount of income from pensions. Another advantage is there are no monthly payments to make. Now, if you're being squeezed by other commitments, financial loans, etc., your equity release plan advisor can make some calculations to ensure that you ease your monthly income amount, but also projecting possible savings that you may make and ensuring that you're not paying over the odds in terms of interest. Also, with equity release plans that we advise on, there is a no negative equity guarantee. That means that you have the confidence in knowing that you'll never ever owe more than the house is worth with that particular guarantee. Another advantage is that you can siphon off a portion of your home to be an inheritance according to your wishes. So that means you can ring fence an amount that you want to go as an inheritance, which would never be touched by the equity release plan. Another advantage is you can stop the equity release plan from eating into your equity by opting for interest-only payments. So that means you can ensure that the debt doesn't compound, which is one of the disadvantages, but you can ensure that a monthly payment of interest only can keep the debt at stable levels. And of course, there are the various advantages of what you can do with the funds that you decide to take out from an equity release plan. Interestingly, there are not many restrictions around what you can do with the money. So you could help a family member to get onto the property ladder. You could help to pay for university fees for grandchildren, for example. Or you can simply do home improvements. Maybe there are things that you need to improve in the home to give you further comfort, or for medical purposes, for example, a chair lift or ramp. You can also use the funds to simply go on holiday, or even to buy a holiday home in the UK or abroad. So there are a number of things that you can consider equity release for. Also, with the increase in unsecured debt, some folks do find themselves towards retirement, perhaps feeling the pinch of these unsecured commitments, which may eat into your monthly income. With equity release plans, there are some providers that will also permit you to consider some debt consolidation by easing your monthly commitments as well. Equity release can also be used to upsize, so you can use equity release to buy a larger home, or you can conversely use it to downsize. So equity release is not just about extracting equity, but it can also be used in helping you to purchase and to move home as well. So there are a lot of features around equity release. Yes, there are some very real disadvantages that we've just discussed, but there are also a number of advantages and positives to take from equity release plans, which now, as we know, are heavily regulated and licensed by the FCA. If you'd like some more information, please feel free to book a discovery call, and you can even invite a family member to join you, or a close friend. And as always, we encourage you to like or comment in the links below, and subscribe for further updates if you would like to. Thank you for joining us on this episode. We look forward to seeing you on our next installment at myequityreleaseplan.co.uk.